Welcome everyone to Vested Interest. This is Shane, and this is our weekly portfolio update. We are going to cover the $1,547 we did add in new capital and what positions we spread those funds out over. We also are going to cover the reallocated funds, $22,371. We did sell out of a couple positions, so we will cover all of that as well. But before we get too far into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos. And a special thank you to those who subscribe to the channel. I really do appreciate it. Now, for those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers a dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio on a weekly basis, and I cover those investments. That's what this video is. We're going to cover that weekly portfolio update. I also do larger purchases if I get a bonus. Usually I get bonuses around March or April, or if I was doing a side job, I drop those funds in as well. Now, it is free to see what I'm doing in my portfolio. I don't have a paid Patreon account. I'm not trying to send you to any other sites to sign up for, any mailing list to sign up for, anything like that. But if you would like to help out the channel, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. Along with this portfolio update, I do this every Sunday, so you'll see this every Sunday. But I also do a stock pick of the day series Monday through Thursday. When the market's open, we take a look at company stock that's pulled back on the day. There is the thanks button as well for those of you who may want to buy me a cup of tea down below. And again, a special thank you to all the subscribers and viewers of the channel. You guys are awesome. The channel continues to grow because of people like you. Really appreciate everyone who's taking the time to do that. A couple seconds, hit that thumbs up button, hit the subscribe button, make sure you click that notification bell. Thank you, thank you, thank you. All right, let's get into the meat and potatoes of the video here. No options. We have not really been focusing on options at all recently. Hopefully I'll get back into it here next week or the following, but we will see. Now, for the first major move in the portfolio, we're going to go over the reallocated funds. We did sell out of Realty Income altogether, and if you've been watching the videos any length of time, you know I've talked about Kraft Heinz. I've owned this one since the very beginning of the portfolio. I was really hoping for better for this company as far as the turnaround. I have not seen the progression I would like to see, so we went ahead and sold out of that position as well. All total was selling Realty Income. I don't know why they broke it up into 100 shares. Maybe someone had a covered call or something on, and those 100 shares went there. But they broke it up into 100 and 169, 269 shares, and some fractions of a share total, and then the 269 shares of Kraft Heinz. And again, some fractions of the shares. Those usually settle a couple days after the full shares. So we'll have a little bit more next week that we'll add back into the portfolio when those settle, or the following. Usually it's a week later or a few days later. But for now, $22,371.44 reallocated in the portfolio. And we reallocated those funds. We're going to try to go through this pretty quickly. We basically reallocated across the portfolio, and we did open one new position. So got rid of two, opened one. But with those funds, we added 49 shares to our existing Schwab ETF position, ticker SCHD, 2 shares to Vanguard Total Stock Market ETF, VTI, ticker VTI, 140 shares to our Valet position, ticker VALE, 6 shares to our American Waterworks position, ticker AWK, and SCHD, VTI, those are ETFs. Valet is out of the materials sector. AWK is out of the utility sector. We added 28 shares to our Pfizer position, ticker PFE. This is out of the healthcare sector. Sorry if I'm going through these pretty fast, but I want to get through them and not make this video, a 30-40 minute. But Cisco Corp, we added 16 shares to SYY. This is out of the consumer staples sector. 10 shares to our NextEra Energy position, ticker NEE. This is a utility company here as well. Have not added to this one in a very long time, but we thought we'd dip in there and reward some of the companies that are doing well, right? Next Energy is up quite a bit, but let's throw 10 shares in there anyway. 10 shares to our LyondellBasell Industries position, ticker LYB. This is out of the materials sector here. Now, it's actually 5, 21, so 26, 36, 40 shares total, but they broke it up funky how they did it. It's all at $21.54, but I don't know why they broke it up that way. That's just how it shook out. But 40 shares to our Haverty Furniture Company, ticker HVT, This is out of the consumer discretionary sector. 10 more shares to our CVS Health Corporation position, ticker CVS, out of the healthcare sector. 20 shares to our Comcast Corporation position, ticker CMCSA. This is out of the, this is out of the communication sector. Sorry there, brain fart. 24 more shares to our Occidental Petroleum position, ticker OXY, out of the energy sector. 12 shares to our Lam Research Corporation position, ticker LRCX. This is out of the information technology sector. 10 shares to our Procter & Gamble position, ticker PG, out of the consumer staple sector. 8 shares to our Union Pacific Corporation position, ticker UMP. This is out of the industrial sector. And our new position in Vici Properties, ticker VICI, we picked up 240 shares at $30.09 per share. Now, unfortunately, because of the nature of some of these, like Lam Research, Occidental, Comcast, NextEra Energy, Cisco, even American Water Works, they are relatively low dividend yield paying stocks, lower yields, but a little higher growth than what we were getting. Kraft Heinz didn't have any growth, and Realty Income was a slow grower. So part of the reason for this is to try to bring in a little bit more growth. But then again, as I said, part of the reason was I've been sitting watching Kraft Heinz for about 4 years now, and it is just not recovering the way I wanted to. A lot of the things that they said they would be doing as a company, bringing down debt, that sort of thing, they really have not gotten it under control, and I'm not seeing the results I wanted to see. So I thought I'd step away from that, as well as they were not raising the dividend at all. So with Realty Income slow growth, with Kraft Heinz lack of growth, it was just time to cut the cord here. I feel very confident with the positions I've spread these funds out over, and I like the Vici position added in as well. But it did take away $279.22 in passive income. Now, we do get into, we had a good week in dividends, $515.09 in dividends, and it was received by 3 different companies all on the same day. On the 3rd of February here, we received $160.23 from CVS Health Corporation, ticker CVS. This is out of the healthcare sector. And these funds, this $160.23, went right back in and picked up 2.87832 more shares of CVS. We do have the DRIP set, so that stands for Dividend Reinvestment Plan, right? And that just means anytime a company pays out dividends, in this case CVS, and the $160.23, those funds go right back in and pick up more shares. And same thing with Verizon. They paid us out $244.69, and those funds went right back in and picked up more shares of Verizon, ticker VZ, out of the communication sector, 6.16503 more shares. AT&T paid us $110.17, and again went right back in and picked up more shares of AT&T, picking up 4.56194 more shares of AT&T, and ticker T is out of the communication sector as well. Total additional passive income added from the new shares picked up by the dividends paid out, $29.41 out over the next calendar year. So this will help alleviate some of that $200+ that we lost in capital, but not all of it, that's for sure. Now, new funds, finally into the new funds. We did add on February 3rd, $986.74 in new capital to the portfolio. With those funds, we picked up 2 more shares and added to our LyondellBasell Industry position, ticker LYB. This is out of the materials sector. Added 4 more shares to our Comcast Corporation position, ticker CMCSA. And this will be part of our monthly buys here throughout the month of February. We're going to be pretty consistently adding to Comcast here. So 4 more shares there. Same thing with Occidental Petroleum. We added 12 more shares to our Oxy position, ticker OXY position here. And another one that's going to be part of our monthly buys in February. Probably right around the same 10-12 shares a week here for the rest of the month, as long as it stays around or under my cost basis. And same thing with in Occidental was out of the energy sector, and same thing with their Cisco Corporation position, ticker SYY, out of the consumer staple sector. Picked up 2 more shares there, and these will all be, these 3, if not these 4, will all be part of our buys consistently for the month of February. Now, passive income from this $986.74 invested, the new positions it picked up added $30.64 in passive income over the next calendar year. We weren't done. We went back in on February 7th, Friday there, added an additional $560.41. And with these funds, we picked up 10 more shares and added to our Valet position, ticker VALE. This is out of the material sector here, picked up those 10 shares. We added 2 more shares to our Verizon Communication position, ticker VZ, out of the communications sector, and 3 more shares to our Schwab Strategic Dividend Growth ETF position, ticker SCHD. This ETF and the next one, VTI, those will be our weekly buys. We will buy at least 3 shares of SCHD and at least 1 share of Vanguard's Total Stock Market ETF, ticker VTI. 1 more share added there as well. $21.99 in passive income added. Total invested $1,547.15. And if you recall from the reallocations, we were right around $270 or so, $280 right in there. Loss of passive income. Now with the dividends received and the new income, that brought us down a little bit, only losing $198.76 in passive income. So not quite as bad. And if you recall last week, we sold out of another position and we gained a little bit. So really, we're pretty close to flat, down a little bit still, but it's not terrible. And I think, like I said, as we go to the end of the video, you'll see here, it did increase our future growth there a little bit. So we'll talk about that in the next slide or next couple slides. Let's run through the sector weights. There have been some significant changes here over the last couple weeks. Like I said, reallocating some funds, quite a bit of funds here. Communication sector makes up 10.33% of the portfolio. Consumer discretionary at 2.16%. Consumer staples at 7.77% of the portfolio. Energy makes up 8.38%. Financials at 2.8%. So right now, the two tiny slices here, consumer discretionary and financials. I may start looking for positions here that I want to add in the future and start throwing them on my watch list. I haven't decided what those are yet. We'll have to wait and see. But healthcare makes up 13.02% of the portfolio. Industrials at 7.45% of the pie. Technology is still the largest piece of the pie here at 14.89% of the portfolio. Materials makes up 9.28%. Utility sits at 8.05%. REITs and real estate has taken a bit of a hit here, pulling realty income out of the portfolio, but adding Vici. It was not a one-for-one swap there, but if Vici drops below my cost basis, it is one that I wouldn't mind building out so that it's a larger position. Right now, I think it's under 3%. So I may be adding here to the REITs and real estate position if Vici stays around my cost basis or lower. And then ETFs is, did I say REITs? Yep, REITs is the small 5.65, and ETFs at 10.25% of the overall portfolio. Over here to the right, you can see the same sector weights and percentages that match the pie, as well as the dollar amount allocated to each sector as well. All right, here it is, and I show this every week. I want you to see a real portfolio built out over time. I think it's important for those of us in the space here, the dividend growth in space or investing space in general that are talking about investing, to show our portfolios over time. That way people can really see what we're doing, what's going on. I think it helps those of you who maybe are just starting a portfolio see the ups and downs of the market, the ups and downs of individual positions. You know, they all have a 52-week high. They all have a 52-week low. At any time during the year, they could retest that 52-week high or set a new 52-week low. It's just the nature of market. There's a number of reasons that they may do that. Bad earnings reports, negative news, something goes wrong with the company, earnings starts to slip, war breaks out. You know, sometimes even bad storms out in the Gulf of Mexico might impact the energy sector. It's a lot of different things can impact the stock. You should be looking at separating the stock price from the company, right? Understand how to value a company. If you don't know how to do that, stick to ETFs or index funds. Warren Buffett would recommend something that tracks the S&P 500. So something like SPY, SPY, or Vanguard's VOO would track the. There's several others out there, but that's what Warren Buffett would recommend. If you don't want to do that type of deep dive into companies where you're looking at their balance sheet, their income statement, and really trying to understand and price out a business, figure out what you're willing to pay, then stick to ETFs and index funds. Nothing wrong with that. But I do believe it's important. That's why I show my portfolio so you can see, right, whether I'm up or down. You know, sometimes it's going to happen. You're going to be down in positions. You're going to be up in other positions. And sometimes that's going to shift over time. Preferably, I'd like to be up in every position, but hopefully this gives some of you out there the confidence, maybe who haven't started a portfolio, that you can do it. I'm not a financial guru. I'm just an average guy. I work, I go to work every day. I've got 2 kids. I'm married. I did not go to college for this. I do have a college degree, but not for this. And if I can do it, you can do it, right? You're going to make mistakes along the way. You're going to learn. Over the last couple of weeks, I've reallocated funds where I've sold out of some positions that I weren't, really doing what I thought they would do whenever I bought them. And there's nothing wrong with that. Shift gears a little bit. Don't hold on to them for too long. Make the adjustments. That's the price of admission here whenever you're investing. And don't be afraid to make mistakes. We're all going to make mistakes. Even the greatest investors in the world make mistakes. So in this column, I'm going to get off my soapbox there, but that's why I show my portfolio. I think it's important, and hopefully it helps some of you out there. Like I said, get started investing, or if you just started investing and you're starting to see some downturn in your portfolio, don't freak out. Don't sell. You only lock in the loss or gain whenever you sell, but make sure you're understanding what you're buying as well. So here is the ticker, all the different positions in the portfolio, how many shares I have of each, and all the numbers are going to be as of the close of business on Friday. Current price per share there, market value here, average cost per share, that's my average cost per share. This does include reinvested dividends. My purchase price, again, does include reinvested dividends. Total return, whether I'm up or down, obviously the red means I'm down. Percent return here, red, again, is negative, and green is positive. The more green, the better. What sector each position falls in, whether they're a quarterly, monthly, semi-annual payer. Current dividend yield, my yield on cost, the portfolio weighting. So what we saw on the previous slide was each sector's weighting, right? This is each individual position's weighting. I do have a rule in the portfolio. I don't want any one position to be more than 10% of the portfolio. I don't want any one sector to be more than 20% of the portfolio, 20 to 25%. Yeah. But that does not necessarily apply to ETFs, right? Eventually, ETFs will be the largest position in the portfolio just by the nature of adding to VTI and SCHD every single week, regardless of the market. Estimated annual dividend income here, payout months, dividend growth year over year. And this is part of the reason that I got rid of the 2 slow growers. Well, no growth from Kraft Heinz, the slow growth from Realty Income. If you remember, my dividend growth year over year was in the 6% range. Now it's up over 7%. So it did help with the future growth. Now, some of these still haven't raised their dividends, like Google. They just started paying a dividend last year. So I'm hopeful that they're going to give me a double digit, 8% or higher dividend raise. Ally hasn't restarted raising their dividends. So I still have that one where if they would not start, raising their dividend again, I guess part of the reason I'm more comfortable holding Ally, I'm up 47%. Kraft Heinz, I was down, plus they weren't raising their dividend, right? So maybe I'll be willing to hold this one a little bit more. But eventually, if this one doesn't start dividend growth, because this is a dividend growth focused investing strategy, eventually I'll have to cut that one out too, right? I'm looking for dividend growth. I'll give a company time, but eventually they're going to have, because they didn't cut their dividend, they just stopped paying or stopped growing it. So eventually, hopefully, they'll start growing it again. Right here, where it sits at 15% of a 52-week low. I think I've touched on this, everyone. Hopefully, you understand that. If you don't understand what this column is, let me know in the comment section down below, and I'll answer that question for you. All right, total shares, 6,815.3 shares in the portfolio. Market value is $330,008.11. I have $308,502.28. And I say out of my pocket, but again, this does count reinvested dividends. But if I wasn't reinvesting the dividends, they would go in my pocket. So it is money out of my pocket, but it does include reinvested dividends. Total return here, I am up $21,505.83 or 6.97%. I don't really focus on this, right? Unless I'm locking in losses or locking in gains, selling out of all the positions in the portfolio, I don't lock in this 21,000 gain here, right? So that you only lock in a gain or a loss whenever you sell the position. Like I locked in a loss on Kraft Heinz. I locked in a slight loss on Realty Income, right? So I did lock in a loss on both of those positions. But unless I sell out of all of these positions, I don't lock in this gain. So I don't focus on gain or loss. What I'm focused on over here is circled in red. We'll get there in a second. Current dividend yield is 3.838%. My yield on cost is 4.105%. We did take a little bit of a hit on our yield on cost. Obviously, Kraft Heinz was a pretty high yielder, as well as Realty Income. So a slight hit there, but still over 4%, over 4.1% actually. So I'm still happy with that. And this is what I'm focused on. That's why it's circled in red over here. All the dividends over the next calendar year paid out from all the different positions in the portfolio. Typically, it goes up, but this one happened to go down this week. Currently sits at $12,664.53. So a little bit lower than what we were last week. But like I said, we did lose some income there from the sales. What we bought did not account for or cover all of the losses. But we should be back on track next week. I think we'll bust over 13,000. We might have been over it this week or next week for sure if we wouldn't have reallocated those funds. But I was ready to ship Kraft Heinz out, and I just thought I'd take the time to do the same thing with Realty Income right now and help the dividend growth a little bit here. Currently sits at 7.18%. So a 4.1% yield on cost with 7% dividend growth. I'm comfortable with that. I mean, that's a pretty good combination. So I'm happy with the changes here. I think shrinking the portfolio a little bit, adding in Vici right here, but removing two others, it gives me, I think, 28 or 29 different positions. Two of those are ETFs, VTI and SCHD. So those are the changes in my portfolio. Love to hear from you down in the comment section. What are you doing in your portfolio? Are there any positions you've sold out of? Are there any new positions that you've added? And how is your portfolio doing overall? I know mine took a hit towards the end of the week there last week. Let me know in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have some questions, go ahead and drop it down there. Let me know what's going on in your portfolio. Would love to hear from you. Again, what are you buying? What are you looking to add this week? We're entering another week here. You're going to see this one on Sunday morning. So Monday morning, what are you looking to add to your portfolio? Or maybe what are you looking to sell out of your portfolio? Love to hear from you in the comment section down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. We will see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing it. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek legal advice and counsel of a certified financial advisor.